Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 2nd, 2022. Hope you're all doing well. In today's segment, we will take a look at Digital Turbine, ticker symbol apps. This company helps with the digital advertising, especially for those mobile carriers and global carriers. Think about AT&T, Verizon, and these type of companies. They use Digital Turbine for advertising and getting that advertising monetization. So with that, let's jump in and get started. So we'll take a look at Digital Turbine and its background, and then we'll look at the competitive landscape. Let's see who are the prominent players in the digital advertising space. Then let's look at the fundamentals of Digital Turbine, look at the numbers on an annual basis and quarterly basis. And let's also do a technical analysis and see if is it a good time to buy Digital Turbine. I love to look at both fundamentals as well as technicals to decide when to buy these companies. And finally, we'll conclude with their rating. Is it a buy, sell, or a hold? So with that, let's jump in. Look, from a leadership perspective, we got Bill Stone. Bill Stone is the leader of this company, and he's got seasoned leadership team here. We got Parrott, Mike, Christie, and so on and so forth. And approval rating for this company is 86%. That's a nice approval rating. The CEO is doing something right here. And look, the CEO, Mr. Bill Stone, he has been with the company for a while, and he joined Digital Turbine back in 2012, and he was CEO back in 2014. Looks like he's been a pretty seasoned guy here. And before, he had been with the Qualcomm and a couple other companies, as you can see here, with a lot of experience in the advertising space. And he knows operators like Verizon, Vodafone, AirTouch, and so on and so forth. Looks like he's got deep knowledge of this telecommunications industry and advertising industry. So leadership perspective checks out. Bill Stone is the right guy for the top job. All right, now let's jump in here and look at Digital Turbine in a little more detail. Look, from a key stat perspective, they are doing pretty well from a revenue perspective. $1 billion, that's great. And they got here 40 plus operators here. Think about companies like AT&T, Vodafone, and so on and so forth. A lot of these operators are using Digital Turbine for their digital advertising needs. And then they got a large footprint here. They got their Ignite platform, and they got 750 million footprint here. That's a good installed base to have. And they got partnerships and relationships, and they have nice monthly reach here, 1.5 billion monthly reach. That's a good number. And look, from a growth perspective, they're doing very well. Nice and rapid growth, as you can see here. From a revenue perspective, EBITDA is also growing nicely, and non-GAAP EPS is also growing nicely. Overall, company doing very well, but stock came down after the earning announcement. Let's see if it's worth buying up here. All right, now let's look at the little more details about their platform. Look, they got this independent mobile growth platform. That's one of the reasons many folks love this company. They're an independent company. They don't compete with the carriers and OEMs. And they have this nice Ignite platform which will help all these carriers to monetize their advertising. So that's a good platform here. Looks like they got a lot of features, as you can see here. They got nice inventory, on device experience, full suite, and so on and so forth. Looks like platform is pretty good here. All right, now let's jump in here and look at extending opportunity. Look, they have the classic land and expand. They start with their one or two suites to begin with. Look, all these carriers, they got one or two products live, and then they expand. Look at Verizon and AT&T. Now they expanded to 3 or 4 products live, and then finally they will even further expand with 5 to 12 products live. That's how companies slowly lands and then expands. That's the way to go here. All right, now let's jump in here and look at the background. Look, digital turbine, it basically helps with the mobile communications and provides media mobile communication product for mobile operators, advertisers, and so on and so forth. It's a digital advertising play, and they also help with their software platform, which will help these mobile operators. And they operate in multiple countries, as you can see here: United States, Canada, so on and so forth. Look at the stock chart here. Right now stock price is about 19.68. Stock fell down. Look at the performance. They're down 79% from 52-week high, and they're down 58% in 1 year. And look, stock chart perspective, stock did very well back in 2020 during this stay home days, but 2021 came around here and stocks stayed sideways and came down, went up again, and then right from November 2021 or even October 2021, stock has been dropping off big time here. It's been down for about a year, as you can see here. And then we had this quarterly earnings yesterday. After the quarterly earnings, stock tanked big time here. Now it's down 22% in 1 day, or $5.75. If you look at the analyst rating, we got a nice and high rating here with the strong buy from 3 analysts here. So there is some good expectation this company will do well in the future. And look, they did their earnings lag. They missed by 1 penny. I think that's why stock plunged big time. And they were also a little bit softer on their outlook. That's why stock came down here. Let's dig down and see if it's worth buying here. All right, now let's look at the price target. From a price target perspective, look, there is a $40 price target here, and stock price is right now at $19. That's about 50% or I think it's double the current price. That's a good price target to have. And from a technical perspective, it's a sell, as you can see here. And from a fundamental or an analyst rating perspective, it's a strong buy. I love the divergence here. It's a profitable company. I think it's okay to start a position here and hold this company. Typically, as the market rebounds, this stock will also rebound very nicely and rebound more than the market. All right, now let's jump in here and look at the health scores from Stock Rover. From a health score perspective, look, we got here fair value $37. Currently stock is at $19, as many of you know. Nice margin of safety here. No need to worry. I think there is a good margin here. From valuation, it's a 65, middle of the road here, not too cheap from a valuation perspective. And look, from a valuation perspective, it's if you look at the trajectory here, a little pricey, but it came down slightly in recent quarter. And from a growth perspective, nice growth score here compared to the industry. It's growing nicely. That's why growth score is high here. And look, it's been growing nicely in past couple of quarters. Nice trajectory here. And from a quality perspective, it's compared to industry, it's a good quality. Think about gross margin, net margin, profitability. They're doing very well from a quality perspective. And look, last couple of quarters, it's profitable, as you can see here. It came down slightly from 3 quarters ago, but still profitable, doing well. On the other hand, from a sentiment perspective, because stock came down after the earnings, it's a low sentiment right now. Folks are not upbeat about this company. That's why sentiment is low. From a Piotrowski F perspective, that tells you how is the book. It's not superb. It was good like 3 quarters ago, and even maybe 5 quarters ago. But right now, Piotrowski F score tells you, it's not great from account perspective, but it's okay, not too bad. And from an Altman Z score perspective, it's right in the border. 1.8 is a good Altman Z score, 1.8 and higher. This is 1.7, not too bad, but not great. And now if we compare Digital Turbine to its competitors and peers, they got nice overall rating. It's a 79 overall rating. That tells you, compared to competitors, this company doing great. And growth perspective compared to the competitors, it's a 99. That tells you this is a growth company and growing nicely compared to its competitors. From a valuation perspective, slightly pricey as you can see here, more than average, but not super high valuation at this time after it's dropped off here. From an efficiency perspective, think about balance sheet, gross margin, net margin. It's 86. They're doing very well from a margin perspective. Financial strength compared to the competitors, that's great here, 77. So it's a good company to own, no need to worry. Their financial strength is good here. Momentum perspective, after the stock dropped off big time, momentum is very low. This typically happens after the earnings, when the stock tanks big time. People don't have too much expectations, and also the RSI or relative strength index comes down, which is a momentum gauge. That's why low momentum right now. That's why it's good to have a small position here when the momentum is low, when the sentiment is low. That's when you come in and buy this company. And from a price estimate perspective, look, current price is $19. This one has got nice average target price of 51 to 117, and middle of the road is somewhere right here as you can see here. So I think it's a from an estimation perspective, it's a good one here. And as you scan through here, they got nice 5-year EPS growth estimate. In next 5 years, it's expected to grow 39%, and next year's sales growth is double digit, 33%. Nice expectations. Basically, analysts are expecting nice growth for this company. And look, from an EPS perspective, when they announced this time, it's a EPS negative surprise. It's a 1 penny down. That's why stock came down. And right now, overall rating perspective, it's a strong buy rating. That's a good one here. So overall, this checks out against the competitors. Stock is not doing very well at this moment, and past 1 year, that's when it's a good one to buy, given this has got nice profit margin and company has got really earning money at this time. All right, now let's jump in and look at the competitive landscape. Before you go into competitive landscape, look, company doing very well. They have a nice TAM, or a total addressable market. Look, they got 10 billion TAM from a brand perspective, from a carrier content media. $400+ billion total addressable market in the publishing space, and so on and so forth. Look, they have a nice total addressable market, and they got some synergies here, and they're working to really capture this total addressable market and grow nicely. All right, now let's jump in here and let's look at competitive landscape. Look, this chart is organized by market capitalization. Stock at the top here has got nice and high market capitalization, and many of these stocks are in the digital advertising space. That's why they are all in the similar space here. May not be direct competitors to Digital Turbine, but in the same advertising space. And also keep a watch on the overall score here. That tells you what the great company. I love to see when the overall score is above 60 or so, and also RSI is below 50. Look, we got Twitter and Trade Desk. Both are good ones here. Trade Desk is a superb stock. You could buy Trade Desk at this time here. Look, RSI is very low here, 47. Little bit pricey from a price to sales perspective and price to earning perspective, but it's a great company. You could buy this company as it's down big time here. And look, it's a positive net margin company. It's making money. And then you got one more here, OMC. This also a good overall score here, and stock has been not doing great. Look, it's just done 4% in past 5 years, but it's a positive net margin company. I prefer Trade Desk better. It's look at the performance here, last 5 years great performance, and this company is a great digital advertising company. And then you got few more here. We got one more, IPG. IPG has a nice overall score here. They have done very good the past 5 years. Right now, all the digital advertising stocks are down big time. Good to buy some. And look, we got our company here, apps. Look at that performance in past 5 years. Great, 1673% performance. Overall score is great. And look at that net margin here, 5%. It's making money. It's a good one to buy at these levels here. And then you got one more CRTO here. Nice overall score here, 79. And this company has not made money for investors, and it's a net margin positive company. Maybe okay to take a look right now and have a small position here. And we got THRY here. This one has got nice overall score of 80. This company also has not made money for investors in past it's done money in past 5 years, but right now it's beaten down the low RSI. You could buy this great company, net margin positive, as you can see here. And then we got QNST here. QNST also doing pretty okay. Look, it's got 179% overall performance in past 5 years. Right now, stock is a little bit higher with the RSI 56. When it's down slightly, you could buy this stock here. All right, now we got a few more grades here from an industry perspective. Let's look at the industry grades here. From an industry grade perspective, it's the same stocks as you can see here. Now we have brought in some industry grades like Altman Z-score, Piotrowski F-score, and so on and so forth. Look, we got here Altman Z-score, Piotrowski F-score, and Morningstar grades here. From a Morningstar grade perspective, Trade Desk is a good one here. You could even Twitter for that matter. You could buy these great stocks up here. Given RSI is low for these stocks here, you could buy them here. And I prefer Trade Desk, which is a nice digital advertising play here. And then as we scan through here, we got our apps or digital turbine right here. Look at that growth here. It's a growth company with a nice grade A in the growth. You know, profitability is grade F right now, but many of these stocks are that way. And as you scan through here, we got one more here. QNST is a good one here. It's a nice grade from a growth and profitability perspective. B and B. Financials is C, not too bad. You could look at this one too here. And then as you scan through here, DV here, double value. Double value seem to be doing great here. They got a financial grade B here, growth grade A, and profitability grade C. You could look at this great company also. And then you got Pinterest, one of my favorite here. You could look at Pinterest also. Look, they got nice grade when it comes to financials and growth. Profitability is not there yet. So with that, that's a quick comparison when it comes to industry and how these stocks are stacked up, when it compared to the industry. All right, now let's jump in here and look at Digital Turbine. From a snapshot perspective, look, Digital Turbine market cap is about $2 billion, and it's a very strong buy from an analyst perspective. And look at that one-day drop here. Stock came down after the earnings announcement, and they got a little bit 1 penny shy of the earnings per share expectation, and also some tepid or a softer outlook. That's why stock came tumbling down here. And they're also making some accounting changes, which Wall Street did not like it right away. All right, look at the performance here, not too great. They're down big time. And as you scan through, they've done great in 2 years and 5 years and even 10 years, but near term they're struggling. And as we talked about earlier, they got nice free cash flow, no big deal. And look at the expectation here. Next year sales growth, double digit. Next year EPS growth, also double digit. As you can see here, it's a growth company. Technical perspective, it's a strong sell right now, and overall rating is 78. That's great. From a Morningstar perspective, great financial health here, and grade A when it comes to growth, and it's actually grade F when it comes to profitability, not A. It's a grade F. So overall, I think it's doing okay right now, beaten down big time. All right, now let's jump in and look at the numbers. From a numbers perspective, look, it's a profitable company. Earnings per share is going higher. That's a good one here. And sales, top line sales growth or revenue growth going higher. That's also great. Shares outstanding slightly increasing, not a major concern, but we got to keep a watch here. But this is okay with the nice sales here. It's okay to dilute slightly. And look, from a margin perspective, operating margin trending higher. Even there's a small downtick here, but overall trending higher. Same story with the net margin trending higher. And last one here is it's really not quarterly earnings. It's really debt to equity. And debt to equity, as you can see here, it slightly went higher. That tells you they took some new debt in 2021 or later to 2022. I want them to control the debt here. Right now it's slightly, I mean, not too much here. It's below 1, as you can see here, but they took on some debt. I think they should control this as they go forward. All right, now let's jump in here and look at the earnings history. From an earnings history perspective, look, this is data from Seeking Alpha. They missed on the EPS by 1 penny. That's why Wall Street did not like it. They also missed by the revenue estimates. Also, that's the reason stock came tumbling down. And they also talked about accounting changes. Wall Street did not like it. It came 19% and even more than that. And look, guidance points to some deceleration in Q1, so that's why Wall Street does not like it. Overall, if you look through their revenue increase, looks like they're doing pretty well. Look, past couple of quarters here, they have done nice revenue increase. That's a good one here. It's a growth company. The revenue was 27 million back in 2017. Right now it's 184 million. That's a good revenue improvement. And the problem is they missed on both EPS and the revenue. That's why stock came down. I can expect a nice bounce back from these levels. All right, now let's jump in here and look at the quarterly numbers. Look, from a numbers perspective, right now stock price is $19. Back in 12/31, it was $60. Look at the drop here. This stock is cut by 1/3 or so. That's why at this time it's completely beaten down here. And look, stock price was $80 back in 2021. So look at that price drop here. After all these growth stocks are taking a big hit here after the inflation. That's why this one also is coming down big time here. Share dilution is happening slightly, but not a big concern for me. Dilution is right here, not a big concern. Sales is growing nicely here, 310 to 375. That's good here. And look, they're surprising Wall Street with nice sales growth improvement. That's a good one here. Earnings per share in the recent quarter, this does not have recent quarter, both sales as well as earnings per share, both are negative surprise. That's why stock came down here. Nice respectable gross margin and also positive net margin. That's good here. And overall, they're spending money on R&D or research and development, 18 million. That's not too bad here. And their price to sales ratio is pretty good here, not bad here. At this time, it's not expensive. So by looking at this, what you see is really a company that's trying to do well, but when the broader market is not liking all these high growth names, that's why stock price tanked here. If you compare it to back in 2019 to now, it's a good price increase here, but stock took a hit in last couple of years. All right, now let's jump in here and look at the monthly return versus S&P 500. This is again from Stock Rover, and look what's going on here. Right now stock is down here. Many times it may not exactly rhyme, but you can take this as a guideline. Sometimes in April, May time frame, stock might come down, and performance is lower than S&P 500. But June is typically a good month for this company. Look, in June it goes higher, and in August also typically it goes higher. So as you look through here, it looks like after April, May, you could buy this company and you could hold it for a while. You could sell it in August and buy back in October, then sell again in February. If you're a trader, if you're a long-term investor, you could buy some now because it's beaten down, hold it for a while, maybe a year or so, then it can go high nicely and bounce back. All right, now let's look at the technicals. From a technical perspective, look, stock has exploded higher back in 2020, as you can see here, nice uptick here, and even 2021, but now there's a big drop here. And at this time, I think it's a good one to slowly start buying here, and stock should rebound as we go forward. And look, from a smaller 18-month chart perspective, look, stock tanked right now. At this time, it's all negative from a technical perspective, with volume down here and volatility is coming down, which happens after the earnings. And look, DMI perspective negative, the blue line wants to go down here, and check-in money flow is also down. This typically happens after the earnings when the stock tanks big time. No big deal. That's when you buy slowly. When there is a blood in the market, you go buy. That's the way to go, according to Warren Buffett. All right, now let's jump in and look at the option chain and see what option market is telling us. Look, stock price is about $19. All-time high in 52 weeks is $93. Look at that potential bounce this stock can have. And about $20 right here. Look, there is a 13 open interest here from a call side here, not too much, but look at open interest as we go down here. Look, nice open interest here at 25, 26 and so on and so forth. And if you look at the put side here, there is some open interest, but not as high as the call open interest. Now let's look at the put call ratio. From a put call ratio perspective, it's 0.7. It's below 1. That tells you there are more people buying call option, 37,000, versus put option. That's a bullish sentiment here. So that's why it's a good one to either buy the stock outright at these levels and start accumulating, or if you're a call option buyer, you could slowly buy some call option, maybe delta 70 or so below the current stock price, or even call spread. If you're a spread trader, go with maybe say 15 and 25 type call spread here and buy that and take it from there. All right, now let's jump in and conclude. From a conclusion perspective, look, stock, the digital turbine, the revenue increased by 94% year over year. That's a good one here. And gross margin also improved from 46% to 49%. I think overall it's a good one here. And they also did some accounting changes that did not go well. Look, while the management believes reporting changes and the accounting changes should help investors better understand the business here, but these type of changes, Wall Street did not like it right away. It takes some time to sink in. That's one of the reasons stock came down here. And this accounting change or reporting change, that put some downward pressure on the stock price here. That's the overreaction from from Wall Street side of the house for this accounting or reporting change. And look, this company sent some red flag to investors by restating its financial results for fiscal 2022. That's what happens the moment you restate. Folks are a little bit worried. And it made changes to reflect the revenue, net of revenue, share costs. I think that's something they have to do here, because they have all these acquisitions they have done here. They want to reflect it right. So that's one of the reasons, even though they want to do reporting change, it was not pursued correctly from Wall Street yet. And during the call, the CEO, Mr. Bill Stone, and he also pointed to macroeconomic challenges. I think all these companies have to do it because it's a tough environment. and Wall Street thought, hey, CEO is a little bit bearish in his commentary. That's why stock came down here. At this time, stock is oversold. I recommend buying the stock moderately here and accumulate a nice position, because this company can rebound as broader market rebound, and this company can rebound harder because it's a positive profitability company, and they're just getting started and they want to expand their total addressable market. So with that, thank you very much. Happy investing and trading. Please subscribe.